Have you ever scrolled through social media and seen people write, "buy the dip," or "I invest in Tesla"? Have you ever wondered what exactly they are buying? Today we will figure out what a stock is, how it works, and why people are so interested in it. What is a stock? In simple words, a stock is an ownership share in a company. When you buy a stock, you become the owner of a tiny piece of a business. Cool, right? Imagine that a company is a big mammoth. The tribe hunted the mammoth and cut it into pieces. One piece of meat equals one stock. You take a piece, and you become the owner of a small part of the mammoth. Why do companies sell stocks? Good question. Companies issue stocks mainly to attract money. Creating and developing a business is expensive. You need to build factories, develop products, expand into new markets, and pay bills. Instead of taking a loan from a bank and then paying it back with interest, a company can sell stocks. The money received from the sale does not need to be returned. It becomes the company's capital. Example: suppose cavewoman Maya wants to open a spear shop. She has few bones. She divides the shop into pieces. Caveman Jordan gives bones and takes one piece of the shop. 5 winters pass. The shop grows. It becomes like a big cave. Jordan's piece is now worth more bones. But if the shop collapses, like a broken spear, then Jordan's piece is worth fewer bones. This is the essence of stocks in the real world, only on a much larger scale. Some companies also share their profit with shareholders. This is called dividends. In fact, it is a portion of income for being a co-owner. Where are stocks bought? For this, there are stock exchanges. An exchange is a marketplace where stocks are bought and sold. The most famous ones are the New York Stock Exchange and NASDAQ. Today, you don't even need to go there. You can buy stocks right from your phone through investment apps. When a company becomes large enough, it can go public on an exchange. Then its stocks can be freely bought and sold by anyone. Why invest in stocks? Why risk money at all if you can just put it in the bank? The answer is simple: potential returns. The bank gives 1 to 2% per year, while the stock market has historically returned 7 to 10% per year on average over the long term. But, of course, with much bigger fluctuations and risks. Some people buy stocks for the long run, so businesses can grow for decades. Others actively trade, trying to profit from quick price jumps. That's it, stocks in a nutshell. Remember, when you buy a stock, you don't just take an abstract price tag, but a real share of a business. If you decide to invest, start with companies you understand and believe in. And never put all your money into one stock. That's like putting all your eggs in one basket. Thanks for watching. If this was useful, hit like and subscribe to the channel.